Hi, this is Chris from thetraderguy.com taking a look at the dollar yen pair, and you can see that we certainly have a major event has just happened. And I have the last video I did was that we were testing serious support. So what's next? And I think we got our answer on Friday. At this point, you can see there's a trend line that goes back to 2012, so it's a pretty significant trend line. It was tested here in 2016 and confirmed, and we bounced significantly. So breaking down below there was a big deal. 105 being support as it was previous resistance was a big deal. So you can see as I zoom in that that close on Friday below 105 certainly was a negative turn of events. And at one point on Friday, it looked like we might be able to bounce from 105. I thought perhaps we were trying to form a base there and basically get rid of the trend line, maybe go sideways for a while, and then perhaps, based upon good news, possibly the calming down of the trade war talk between the US and China, then we could bounce, because a lot of that happens with this. But there's a lot of risk off out there in the market right now anyway. Stock markets are selling off. There's a lot of different things going on. So the question is, where do we go from here? And there's a little bit of a gap here from the February of 2016 that measures down to about 103. And I think that's the next short-term target. So there is going to be a lot of concern when it comes to the trade war talk, and if that escalates over the weekend, and I'm recording this on Saturday, it's likely that we will continue and we will open up lower, because breaking 105 is a significant psychological deal. Now, if we can break down below that gap, and it very well could happen based upon the way we're seeing this accelerate, I think somewhere around 100, 101 is the next major support area. And 100 would essentially be my longer term target. That doesn't mean that it's going to be a straight line, but this pair will certainly be very volatile at times, and it will unwind rather rapidly at times. The alternate scenario will be based upon emotion and nothing else, and that will come in the form of China and the United States talking these things over and cooler heads prevailing. But the way this pair moves, that would have to happen like almost instantaneously for this market to break down and then turn right back around. This pair moves so quickly that I would not be surprised to see the market reach towards 100 over the next several sessions. This is largely a risk-on, risk-off pair anyways, so I think we're going to continue to see yen strength, and that by extension will probably bring down most stock indices. I think we have some more pain ahead of us for equity traders as well. Very interesting chart. If we can break above this high from a couple days ago, basically 106.5, then that would mean something. 108 would obviously be very strong. Right now, though, until we get a calming down of tensions between the United States and China, this is a market that's going to continue to fall.